Welcome to the show that takes up no more than 5 minutes of your time, but could help you gain massive real estate knowledge. It's 5 Minutes in Real Estate with best-selling author Shane Willis.
Well, hello, Shane Willis, Pensacola real estate expert, bringing you today's episode. So are we shifting to a buyer's market? That's the question I wanted to ask because it's been asked of me quite often. Are we shifting to a buyer's market? Well, here's why the question is being asked. This is why we're getting that feel of stuff. Appreciation is starting to slow. I was actually talking with a client yesterday, and they said, we're looking at buying a house, and in 5 years, man, if things keep going the way they've been going, that thing will be worth 50% more. And I told them, don't expect that. Really not to expect that. That, yes, in Escambia County in 2017, there were some price points that saw double-digit returns, 10, 11, 12% appreciation in a year, which is nuts. That's what we saw in 2004, 2005. So that actually, last year, started to scare me a little because I was starting to see some rapid appreciation. 2018, on the other hand, has been a different story. It's come down to where most of the price points here in Escambia County are seeing, looks like the end of the year we're going to be about 5 or 6% up, which is fine. With that deceleration of appreciation, does that mean that we're moving towards a buyer's market? Or the seller's market that's been running for so long is actually going to move towards a buyer's market? I don't think so. So I pulled up some economists, and I wanted to kind of read you what they wrote. Dr. Shandigudel. There's no way I'm going to be able to say that right. Here, I'm going to spell it. That way, for all you guys listening, you guys can tell me what that actually says. Svenja. That's the first name. Judell. That's the second name. That's the last name. So, yeah, he's a doctor. He's an economist. We know that. And there's no way you can say his name. If you can, say it. Voice message, or put a voice message on either YouTube or wherever you're listening to. The seller's challenges don't indicate we're suddenly in a buyer's market. We don't expect market conditions to shift decisively in the favor of the buyers until 2020 or later. Okay, hang on. He was actually putting a date on it and said decidedly shift more towards the favor of buyers. But buyers are certainly starting to balk at a rapid rise in prices, and home values are starting to grow at a less frantic pace. I just got finished saying that. And Dr. Nobody can pronounce his name said we're going to shift towards a buyer's in 2020, but he didn't say a buyer's market. He said it should decidedly towards the buyer's favor. So think about this. Think about a pendulum. It goes back and forth, right? We saw this pendulum happen with mortgages. My goodness, we see it happen with mortgages. The pendulum was too loose. It was too easy to get a mortgage in 2006. In 2010, it was too difficult to get a mortgage. 2012, it was too difficult. So the pendulum switched way extremes. Now, as far as the seller's market is concerned, that pendulum has swung really hard to the left as far as, hey, it's definitely a seller's market and not a buyer's market. What Dr. Nobody Can Say His Name said was that it's going to shift decidedly in the buyer's favor. What I believe and what other economists are pointing out is that it's going to come back to a neutral market. So basically, we're not going to sit here and say, hey, is it a buyer's market or a seller's market? No, it's a neutral market. Now, of course, if you've listened to me at any amount of time on any of these podcasts, you know that when someone asks me that generic question, I always ask what price point. Because right now, I can tell you that the 100 and under price point, $100,000 and under price point in Escambia County is a huge seller's market. 1.8 months worth of inventory. Anything under 6 is considered a seller's market. Anything under 3 is considered a hyper seller's market. There's 1.8 months in that price point. But you get to 6 to 750 in Escambia County, and there's 14 months worth of inventory. Anything over 6 is a buyer's market. Anything over 9 is a hyper buyer's market. 14 months there. So I hate when people say, hey, how's the market? Is it a buyer's market or a seller's market? It depends. Depends on the price point, what you're looking for. So, is this pendulum going to shift more towards the buyer's favor? Yes, I think so in 2020. And if you go back and look, I've talked about a recession in 2020, not in the housing industry. And that was the premise of my entire podcast there. Out of the last 6 recessions, 5 of them, housing actually gained in value. I believe that's still going to be the case because it doesn't look like there's any indications that we're anywhere near what we were doing in 2006 and 7. Okay, inventory's not there. But I still think there may be a little pullback in the stock market in 2020. GDP may fall a little in 2020. Probably doesn't hurt that 2020 is also a presidential election year. So I'm sure there'll be some politics involved as well. All right, let's talk about the other economist, though. See, I can say her name, Danielle Hale. I can say her name, no problem. She's the chief economist over at Realtor.com. The signs are pointing to a market that's shifting towards buyers, but in most places, we're still a long way from a full reversal. So we are a long, long way from fully calling a lot of price points a buyer's market. I guess this guy does not like me walking out this early. We are a long, long way from calling it a full buyer's market in a lot of price points. So what does that do? What does that do? A client I was talking to yesterday is looking to build and said, hey, listen, I'm about to get a pay raise. It's a different job. It's a significant pay raise, so I can afford more, but I'm not 100% sure I can get it. So we've got this contract to build. Do we want to just keep that contract? And I told him that this should be a 5-year play and just keep the contract with the build for now. I said, if you do get the significant pay raise and you want to invest some in real estate, let's start looking at adding to a rental portfolio. But there's no sense in becoming house rich and cash poor. Let's make sure that we do this smart. And if you can afford it on this lower pay and then you get this significant pay raise for this new job, okay, let's just make some sense out of it. Help you make some right decisions. Are we switching towards a buyer's market? Yeah, I think we're going to be switching towards a neutral market. Should buyers still be taking advantage of stuff now with price appreciation slowing? And so I told my friend, I said, hey, listen, the bears, the people that are the pessimists in this market, are all saying the next 5 years, we'll see about a 10% rate of return, 10% appreciation on your property. So about 2% a year. Not 10% a year, but 10% total over the next 5 years. The bulls are thinking 25 to 30. So even the optimistic are thinking 5 to 6% a year. The pessimistic are thinking 2% a year. Okay. Nobody, I shouldn't say nobody because I hate the all or nothing logical fallacy. The majority are pretty much in agreement that we're not going to see depreciation. That housing is still, because of inventory levels, low. And that's a supply and demand issue. And builders are not going to be able to keep up because they just didn't build enough after the crash. And now we're seeing people having trouble selling because they don't want to raise their interest rates. So if, my house right now, if I sold it, I'm giving up an interest rate of 3 1/8. And my new interest rate would probably be 4 3/4 because that's what prime is right now. That changes things. So that's going to continue to plague inventory, which is one of the reasons we're going to see prices probably still appreciate, just not at the rapid pace we've been seeing. So are we heading towards a buyer's market? No. I think we're heading towards a neutral market. The economic indicators say. All right, that's all I got for you today. As always, if you're not subscribed to get the tips, tricks, graphs, infographics, get over to 5minutesofrealestate.com. Also like the Facebook page, facebook.com/Shane Willis, the Realtor. And as always, I end the podcast the same way. Hey, seriously, I'm going to put a challenge out. Can somebody voice that guy's name? That doctor's name? I spelled it. I'm going to put it in the notes. So if you go to the shanewillis.com/podcast, and that's plural, you'll see it. So you'll see the exact spelling, although I spelled it out here audibly. I want to know how you say his name. I don't know how to say his name. So there's a challenge. Anybody say that? Make sure I give you a prize of some sort. All right, but if you found any value in this episode or any other episode, I always ask that you share it on social media. Have a great Thursday.